Let's talk through though the tax impacts and these tax cuts through the OB3 and what's important to lower middle market business owners. That's who we talk to all day, every day. That's what we are running ourselves. And let's start with the qualified small business stock enhancement. And so just to frame this up, for small businesses that really defined previously to this had less than $50 million of assets on the balance sheet, if they were structured as C corporations in some appropriate different industries, and if the C corp stock was held for 5 or more years, at the sale of that company, if it was an equity sale, they could exclude up to $10 million from the sale from their taxes or 10x their basis. So that has been greatly enhanced. Fill the viewers in on what some of the big changes to the QSBS under Section 1202 were and why this matters.
Yeah, it's very exciting. And, I like anything helping small business owners. And just to be clear, this is for stock issued after July 4th of 2025. If you were issued before, you have that 5-year, $10 million limitation. In the new law, the $10 million actually gets increased to $15 million.
Yep.
And instead of having to hold 5 years, as you know, if you hold 3 years, you get 50% of that $15 million. If you hold 4 years, you get 75%. If you hold 5 years, you get 100%. So much higher exclusion amounts, in addition to you don't have to hold the stock as long. And so I think we're going to see, I want to know what you think about this, but I think we're going to see, especially startups, with the intent to sell.
Yep.
Like, why wouldn't you try to take advantage of this if you thought you're going to sell in 3 to 5 years?
Yeah, I think you're spot on. And because with that 3-year at the 50% exclusion, if you were otherwise going to pay, let's say 20% capital gain taxes on the back end, you hold for 3 years, you're effectively paying 10%, assuming you're underneath that 7.5 or that $15 million threshold there. 4 years, 75% exclusion. So I'm seeing, and even some conversations with clients early on, is for those businesses, like you said, that are being built intentionally for that liquidity event in mind. What about doing a restructuring? Do it as set up a new C corporation. We can talk through how you can actually do this, and then start the clock on the 3 year, 4 year, 5 years, and then you get the $15 million or 10x the basis, which is the fair market value of the conversion. So there's a lot of entrepreneurs we've got that have cash flowing businesses, and then they've got maybe side businesses or side projects that they're looking to grow to scale and to sell. And if you're doing that, you really need to dive into that 1202.
For sure. And another thing that a lot of entrepreneurs don't know is you could actually gift shares of stock to, let's say, your kids.
Yeah.
And you could multiply that exemption. So if you had 3 kids, you could get an exemption for each one of those kids, $15 million for each kid, $15 million for you. And you can multiply the benefit of these exclusions and make it just a huge thing at your exit.
Yeah. I was just listening to a case study, and I think there was like Roblox or something like that. Some publicly traded company just went IPO'd. It was 1202. And I think when the founder, did 12 different trusts is what I heard. And so I think there was like over $120 million tax-free by stacking.
Yeah. I love the stacking strategy.
Well, let's put some numbers to this, and let's use an example. So just putting this into context, if you're an S corporation or if you're a partnership, you're a pass-through entity, this does not apply to you. And so as we're talking about that, your federal tax bracket, if you're at the highest tax bracket, it's 37%. In a C corporation, you're going to pay the 21% flat tax, but when you pull money out as a dividend, you're going to pay another, practically speaking, 23.8%. So you're around 44.8 versus just 37%. So that's why you hear about double taxation. But so that's the downside of the C corporations.
Yeah.
But if your business is not distributing a lot of cash flow to you, it could make sense to make the C corp transition anyhow, because it's really a tax drag. And so if you're pumping all of that profit back into your business, I'd rather pay 21% instead of 37%.
Yeah.
So if that's the fact pattern, you're not really getting hit from the double taxation. It actually reduces your tax drag, and you could start the clock for the 1202. I think if you're checking those boxes, that's where maybe making a conversion to a C corp should start piquing your interest and starting getting yourself set up for this.
Yeah, and I've noticed also sometimes with entrepreneurs that have built up a big balance sheet, or they already had an exit of some kind, their next venture is just to sell the thing, and they don't need the cash flow. And that makes a lot of sense, to build it to sell it rather than build it to cash flow your lifestyle or your investments.
Yeah. Well, let's use an example. So if you're a $65 million, let's assume you're doing $65 million revenue, you're a technology company. And again, in the new law, you have to make sure that your asset threshold is less than $75 million. So you can't have more than $75 million of assets on your balance sheet. But if this was an S corporation, $65 million revenue, S corporation, they could do an F reorganization to convert to a C corporation. As long as it's after that July 4th date, you would have to really, when you're doing the F reorganization, the fair market value of your stock is your new basis in that C corporation. So when we talk about $15 million or 10x the basis, generally if you do this right, and that S corp is, let's say, worth $100 million, well, now you have $100 million times 10. You could have technically $1 billion exemption if you sell that business and you held it for the full 5-year cycle. So it really could become a massive strategy. Make sure you do this the right way, but F reorganization from a partnership or S corporation to a C corporation and start that 3 to 5 year clock.